Hello traders. I hope you guys will be having a wonderful time and I hope you guys will be printing money. If you are still in search of a strategy that suits your trading style, then this might be it, as this strategy has an amazing win rate. I will first explain the strategy, then I will put a demo of my entry through this strategy at the end of the video to train your eyes. The reason I teach so many strategies is that everyone has a different trading style. Like there are traders who love scalping and there are ones who can't even think of scalping as it's risky according to them. The interesting thing about trading strategies is that there are many strategies which work pretty well, but then every strategy will give you losing trades every now and then. The thing that matters is how you react to that losses and how you keep the loss minimum as compared to the profit, and what % of your portfolio you risk in a single trade. The special thing about today's lecture is that this strategy will help you determine your higher time frame bias, and at the same time it will help you with your entries on the lower time frames. So this strategy can be used both on higher and lower time frames. In this lecture I will use this strategy on 4-hour time frame, and the same concept applies to every other time frame. My favorite is 4-hour time frame because the win rate is good and I feel more confident with the structures of 4-hour time frame. Okay. So let's dive into the lecture now. So the first thing is we will look for a specific fair value gap. I am saying specific because there are of course many types of these gaps, but we are gonna look for a specific one. If you have 3 candles, then fair value gap is the gap between the top of first candle and the bottom of the third candle, as you guys can see in this picture. This one is called a bullish gap because it is formed when price was going up. This FVG that you are seeing right now is bearish as it is formed when price was going down. Now there are many ways to use these FVGs, but in this strategy we will discuss this specific type of FVG as you can see here. There is a bearish candle followed by a bullish candle, and then there is gap between the first and the third candle. Similarly in this case you can see that we got a bullish candle followed by a bearish candle and then we got an FVG. So you have to look for this specific type of fair value gap. The middle candle has to be different from the first candle. If the first candle is bearish, the middle candle will be bullish and vice versa. Now when you see such gap on 4-hour, you have to wait for this gap to be inverted so that it becomes inverse fair value gap. What do I mean by inverted gap? So the thing is, when we get such gap, the price is expected to go up from here, and when we get this type of gap, the price is expected to go down. One is a bullish gap and one is a bearish gap. But I have seen in crypto that most of the time this gap don't give the expected move and the price closes above or below this FVG, then it gives a move in opposite direction and the move is usually a big one. At time it gives a small move in the expected direction and then price disrespects this gap and closes above or below it and then gives a good move. Whenever the price gives a move in the opposite direction from an FVG, we say that gap is inverted and fair value gap has become inverse fair value gap. Now I will show you some examples from the chart and then a live demo. In this example you can see that there is a fair value gap on 4-hour, and the price goes up into this gap and gets a rejection. This is normal because this is a bearish FVG and most traders tend to go short in these gaps. But this gap has the potential to betray them and turn into inverse gap, and this gap will become a strong bouncing area. So now the traders are expecting dump and it actually did a big downward move, but on the next day price goes up and closes above it on TH4-hour. Now we will say the gap is inverted and now this gap will give a move in the opposite direction, and here the opposite direction is to the upside as you can see here. Remember this, when the price closes above this FVG then it will retest this inverse gap. Sometimes it will go deep in this FVG and sometimes it will just enter into it, and then pump. This is another example and this time a bearish one. In this case price was expected to pump from this fair value gap but then it closed below it, and the gap became inverse FVG. So it moved in the opposite direction, which is to the downside. The people who were long got trapped at this gap, and those who waited for the gap to get reversed got rewarded. And trading is all about this. Traders gets trapped so that the patient or the clever traders can make money. Now for entry you have to use smaller time frames like 15 minutes or 5 minutes. When the FVG has inversed and became bullish, then look for bullish structure within this 4-hour gap. The structures that you can look for is inverse FVG on the 15 minutes or 5 minutes, or you can look for any order block etc. In this picture you can see that price came down to the 4-hour inverse gap and then we used the 15-minute inverse gap for our long entry. In short, Just look for reasons to long in this inverse gap. You can even use your typical breakout strategy within this IFVG. Now the target and stop loss. So the stop loss should be below the recent swing low that has formed before your entry on 15 minutes timeframe. If the fair value gap is a bit bigger, then go with a smaller size and wide stop loss. In case your stop loss gets hit, then you can always re-enter into this long setup, and the invalidation will be a 4-hour close below this inverse FVG. As long as the price has not closed below that FVG, the structure will be valid. For targets, you should close 50% at 2RR, and for the rest you can wait for sweep of any 4-hour swing high or swing low. The reason I am telling you to close only 50% because most of the times inverse FVG on 4-hour gives a big move. So better leave some of the trade running, but again it depends on your trading style. At the end of the day you are gonna decide how much profit you are happy with and how much loss you can afford. Now watch this short demo of how this gap becomes inverse gap.
I got lost at night, under the stars up in the sky. Directions hard to find, under the stars up in the sky. I got lost at night, under the stars up in the sky. Directions hard to find, under the stars up in the sky. I don't know where to take this, I don't wanna break this. We're living in the moment, we're living in the moment. Your head is on my shoulder, we're never getting older. Baby, it's you and I. Yeah, we're stars in the sky. Oh, you and I. Yeah, we're stars in the sky. Last night, you can't do it peacefully. You won't go without a fight. So when I go, I know you'll follow me. I don't want slamming doors. No, just wait and see. You'll feel it naturally. There's no one else I see. I know you'll follow me. I don't know what to take, but we're getting older. Baby, it's you and I.